Hello. So thank you for joining us at our not normal time. Crystal is trying to get something off my desk right now, so I had a little dog treat trying to bribe her in from where my daughter has her snack. All right. She probably won't stay that long, but at least we have a glimpse. Wait, no, she's over here. Glimpse of the crystal cam. Welcome, and welcome back. We are here abnormally on a Tuesday night. Crystal, there's no more. Tuesday night. So let's see. Normally we do noon on Tuesdays. This is our weekly-ish Q&A live stream. My name is Tracy Lenz. I'm a petroleum engineer. Thank you for finding us today. And if you're watching this on replay, we take questions either live or in the comments. So feel free to leave a comment, question. We'd just like to hear from everybody. Hey, Mary. Hey, Decorator Crab. I like the name. And I saw Martha pop by earlier, so welcome. And then I saw a couple people pop by earlier at a normal time. Unfortunately, I didn't quite get the notice out earlier that it would be later today. So sorry for the disruption for anyone who planned on stopping by earlier. Crystal, no more. Let's see. Make sure everything's working. I think it is because you said hi back. So yeah, you must be able to hear me. So we're gonna go with that. I convinced Crystal to at least investigate a little more. Okay, so I have a little poll going. I do have, it's been a very busy news cycle. I'm not I'm not a news reporter. I am an oil and gas petroleum engineer, valuation professional. But how it affects how all the current news stories are affecting oil and gas prices. I think I'm going to do an update on that because things are just moving so fast. And then I will go into there's a couple topics that happened. Was it today that the Port Arthur? Happy Sarah Week. Yeah, so I can... What did you just do, Crystal? Yeah, I can actually cover. I bet not everybody knows Sarah Week. If you've been to Sarah... Have you been, Fabian? Have you been to Sarah Week? I have not. I've only seen reports from it. I've seen some things coming out of it, so I'm curious... Just curious if anyone else has been there, because I have not. Let's see. I did, go to NAPE. It's similar. Yes. It's bigger than NAPE, yeah. Which is crazy, because when you go to NAPE, it's like, okay, that's from my little small-time person, Like going to, HEB is a lot of people for me sometimes. Agora, it says it's startup innovation section. Okay, great. Yeah, I subscribe to a couple news, like Substacks and Reddit channels, and I try to have a variety of news sources, so I'm not just hearing the same thing over and over and over again, because I don't know, you get your favorites, but then it just seems like the news is always the same until you talk to literally anybody else, and then it's like, what news are you following? And then it's like, okay, I need to follow more news, but then with lately it's like, okay, I can't follow all the news. There's just too much. I would never get anything done. So let's see. Where can I put chat that I can still see things? All right. So we're just going to go ahead and look at, I always like to ground myself with the current commodity prices and strip. It's one of the most common questions we get is how we're handling commodity prices and changes. As many of y'all know who watch this, we do have a live valuation platform. Rock and roll. Yeah. Man, I can't say that without sounding completely old and cringe, as my daughter would say. But, oh, speaking of old and cringe, did y'all like the thumbnail? I knew I wanted something other than the crazy bad thumbnail I had before. And so I was like, we're gonna AI this thing and just AI it some more. And there was actually one AI version that was like, let's just go crazy, make some weird stuff on the thumbnail just to make it really obvious that I'm in on the joke, that this is stupid looking. And that the AI did push the limits on stupid looking. And I was like, yeah, actually, I probably can't put that out as my live stream thumbnail. So y'all got the normal version. But yeah, so let's go ahead and ground ourselves in what current commodity prices are doing, how it's currently affecting things. Got some, yes, use those little emojis. Those are fun. And I can see them pop up on the stream. Does it? Okay, it should cause little, it should cause it to pop up on the stream a little more. So, all right, so we're going to hop over to this. I feel like with this being more at night, I should have music or something a little more chill. I'm feeling less high energy than I normally do at noon. So let me know if this, I don't know, I feel like there should be music or something. All right, so we're gonna pop over here. So with pricing going kind of crazy in the news stories, how is this actually affecting us here, especially mineral owners, especially people who are receiving checks in the mail, either from investing or from inheriting or from however you are associated with the oil and gas industry? Welcome. Well, we are a weird industry. So if you are following oil and gas, you might not have seen many news stories pointing towards there being a lot of change in the actual, how are we responding to prices going from 60 to 90? And I think that this chart here helps show why the response is very muted so far. This is not our first rodeo. Yeah, let's see. Fabian, you say that energy at noon comment sounds like a discussion for either Dr. Rhonda Patrick or Andrew. Yeah. I really like Rhonda Patrick. I always want to say Fitzpatrick, but I guess it's Rhonda Patrick, huh? I really like her genetic stuff, and I've been following her, probably 10 years now, which does also make me feel old, but it really does. But so I have this zoomed out on how the news headlines are showing $90, $100 West Texas Intermediate oil. But in terms of how that looks versus where we were a year ago, 2 years ago, 3 years ago, y'all can see my cursor, right? Yeah. I have a little highlighter thing for my cursor, but it's on my other computer. I have too many computers, I guess. Okay, so what I'm showing here is everything from this line back is historical, actual prices. So this is if someone bought a barrel of oil at that particular hub, not that anyone goes to that hub and buys a barrel of oil, but theoretically, that's what it traded for on that day. And then if the line forward, so everything after that, is what the markets that be have been projecting prices to be in the future. So this is the NYMEX futures. So this is people who have to plan for volumes, actual physical delivery of volumes in the future, how they're trading, and this is the same as any other commodity. Gold. I'm not a finance person. I'm an oil and gas petroleum engineer, but I've asked many a question to my finance guys over the years, and they've answered many times trying to explain futures trading. And I finally had one one of my finance people explained it extremely well. Thank you, Paige, for explaining future trading to me, and Kathleen. Thank you to both of y'all. But also, there's some there was one really good book that I found that helped really ground what was happening. But taking also just doing these live streams and trying to explain how oil prices changing around, especially back during the COVID period. That was really my education into it, right? But let's see. I can't help myself. I kind of want to make this vertical line bolder, so we're going to do that. And hello, Alice. How are you? Thank you for joining. Wasn't sure if the time change was going to ruin the chances of seeing the Alice Hooten on the live stream, but I'm glad it didn't. Okay, so everything from this purple line forward is hypothetical, may or may not happen, but it's maybe not everyone's, but it is the current people actually, putting money into it. Consensus on what might happen. And then, let's see, Fabian, you're saying that the book, The World for Sale by Javier Blas, is that an I or L? Blas? No, it wasn't that book. Wonder what. So, okay, when Jason Hooten partnered with me to found this company, I let him borrow some of my books, like the intro to oil type of books, because Jason also is my brother. He's from the software architecture, fintech, QuickBooks side of the world, and had not been part of oil and gas. And so I let him borrow some of my books, and ever since then, I don't know which ones he still has and which ones I just haven't found. So, but I don't think it was that one. I always mean to look up. Let's see. I'm trying to have my frequently referenced books right behind me so I can pull them out when I need to, but yeah, I'll reference it after. So when we had, let me go, let's see, if I zoom in, I think it's the one below here. Yeah. Red is gas and green is oil. Like when we had the big winter storm come through and cause a massive supply need, or I guess demand is what a supply need, massive demand for natural gas for heating purposes, that caused, heating, energy, all those things to keep most of the U.S. warm when just the entire, half the country got dumped in snow, right? That caused a massive spike in demand. And then that gas has such a small, not small, but compared to oil, it's harder to transport. And so if there's a demand, it causes prices to go up momentarily. But that short-term pricing increase was not because of some long-term thing. It was because of a single winter storm. And as you can see, so the dashed line is the change since the beginning of March to now. And we wouldn't have necessarily expected a lot of change, but I could pull back the gas prices back to February 1st, back to October. And there's change, but it's not like it suddenly went up to, so it goes off of this axis over here. So it's that $7. It's not like it went up to $7 and just hung out there. So when oil first started spiking, the first question was, is this going to hang in there? Is this a real thing? How long is this going to last? What type of supply disruptions are we going to see? And it's only recently that we even updated our pricing for our platform. So our platform is the Pecan Estimate. And let's see, I was a little prepared for this one. Yeah, so we have our Pecan Estimate platform here, and we have live evergreen fair market values for oil and gas, and we use these numbers to send out to some financial institutions, some lenders, some investors, some operators. People are relying for this for day-to-day investment decisions, and what is the value of things doing, how's it changing. And when prices started going up, it was not even a question for me if I needed to up prices, because there was no long-term impact in the beginning. And what this is really driven off is the long-term impact. So the 1 to 5 year range of pricing. So it wasn't until we started seeing that, multi-month impact to oil prices being sustained over at least a couple months. And then also, there's one more disconnect between the industry and mineral owners that's a little bit unique that I'm going to get into a little more after this. But that once that started becoming a impact more tangibly, that was when we went in and revised upwards. And we didn't revise upwards to some arbitrary number. I know that not arbitrary, but I know that a lot of people do use a flat number to model forward pricing. My stance on forward pricing, just to put my stake in the ground on forward pricing, is that if I always hinge off of the same curve and the same number, then I won't be arbitrarily ignoring things that could be affecting the valuation. And by that I mean the present value of any number. Like when I'm looking at the market value, I'm looking at what it can transact today for. So I'm looking at all of these future cash flows that might happen in the future cash flows. What is the value of that opportunity, that possibility today? And when you have something that's not linear, like it's just a straight line into the future, you have to know how to properly account for that. So anything that I can isolate and use the closest value to reality as possible, we're going to do that. So we're going to use the forward strip rather than a flat pricing, because that more accurately models what will happen in the future. We don't know what pricing will do, but we know that it's not going to jump down to 30 tomorrow. Knock on wood. Yeah, it's more realistic than holding it flat. So I'm going to use that one instead. And then to take it from that, because then people get that sentiment around how risky is the market today versus how risky was it yesterday. Can I use the same metrics yesterday versus today versus tomorrow to do this type of investment decisions and risk analysis? That's layered on top. So rather than changing the foundation and having that be a shifting foundation and not knowing how much of that is pricing versus risk, I want that to be a very transparent, separate thing that I can isolate and say, no, pricing has maintained the same, but how the market views that pricing and how the market risks that pricing has changed. So that's why we have not changed how we do our pricing, even though we've heard from multiple sources saying, oh, we're not ready to go up in pricing. Why did suddenly the values go up? Values went up. That's why values went up. Now, the thing that I wanted to, let's see, Fabian, you're saying current prices are fighting the physical versus, where did my little pop-out go? I have a nice little pop-out that I can force it to show up on the screen, but I'm just going to read it. All right. Prices are fighting the physical versus financial paper barrels as region disruption becomes more important. Yeah. So part of it is how much of it is happening here versus overseas. That is a big part of it. And I've had this question thrown at me for people who aren't following it as closely. If the U.S. had a no import, no export rule, we cannot import or export oil at all, then whatever was happening over there would not directly affect oil prices here. There's always the sentiment of war makes energy more valuable because it takes more energy to do all the things you have to do to fight a war. So if we were going that direction, you'd obviously need more materials, need more fuels to fuel plane, like all the things to protection. But the supply disruption overseas wouldn't be affecting us. But because oil is a globally traded commodity, it does affect us. It just affects us in a slightly more buffered way than something like Brent crude, which is a North Sea metric. So North Sea is obviously very well connected to the ocean, as you can imagine. A North Sea, which is by England and the UK, it's directly connected to international waters, and so that one is impacted first by anything that's impacting international oil and gas supply and demand. And then West Texas Intermediate, that one is based, that's a point that's in Oklahoma. So if you think about where Oklahoma is on the map, there's a lot of land between that and the nearest Gulf port. And so there's that land acts as a buffer in terms of the difficulty to market and the access to market, and it's more likely to go other directions, to be used internally, like all of those things. So and then you also say, Fabian, you say it makes sense. A lot of energy project financing, say LNG terminals or long-term exploration outside the U.S. use a forward future price instead of spot price. Yeah, I mean, you're drilling, even if you're drilling shale, high decline, fast return wells, you're still relying on the price for the next 2 years to what's the projection for the next 2 years? And I like to stay in my lane as much as possible. I mean, obviously not with AI image creation, but if there's an expert I can lean on, if there's someone who does this for a living, I do want to lean on them as much as I can. The more that I dig into some news stories, the more I don't trust anybody, but you can't do everything. So if there is an entire industry that is predicting what oil and gas prices are going to do, I'm going to use those numbers. Okay, so on the thing that affects mineral owners more uniquely to the industry, though, is there's been also a lot of stories, and I think I plead guilty to reading the headline on this one because it's been a busy day, but that Chris Wright was, I think the words the headline used was begging the industry to produce more, and we're like, nah, we're good for right now. And as an industry, that's because of that capital discipline, and no, we've been through this before. Like, it was only a couple years ago the oil was even higher, and it bounces up and down. And even when there was a conservative president put into there, he wanted it to go down to 50. Like, we're going to be careful with our money, as we told our investors we were going to be careful with our money. And one of the ways that the industry, and by the industry I mean the people who are drilling wells, and so if you're a mineral owner watching this, you have to, assuming you as a mineral owner are not the one going out there to drill a well, you are mostly reliant on the industry wanting to drill more wells if you want more revenue on your land. If you have undrilled potential on your land and you want that to be drilled, unless you want to spot a couple $1 million, you probably have to wait for the lease to come and exploration and stuff to happen. Oh, Crystal is gracing us with her presence. Oh, just her butt. Well, you get a foot. So one of the things that is a protection for the industry, the people who are drilling these wells and investing millions of dollars in the future price, is something called hedging. And hedging, there's a wide range of how much people rely on hedging and how much companies will hedge their volumes. It's basically, if you were to say that, the saying, hedge your bets, right? If you hedge your bets, that's implying that, I'm not entirely certain it's gonna be high, but I can't really function if it gets too low. So I'm going to hedge my bet somewhere in the middle, and maybe I won't have the highest number, but I also won't have the lowest number. And this is being applied to oil pricing. And so functionally how that ends up working is that these companies will engage in contracts with, usually it's banks that provide these contracts, and they will have certain amounts of volumes that they'll deliver with the promise that, hey, we'll deliver this amount if you promise us to pay us this amount. And so those promises and contracts end up establishing a very steady amount of income for that amount of volume. And so then you're able to do budgeting and forecasting and rely on that cash flow as long as you can produce that production. So when prices go down to -20, or like on the spot price during COVID, or down to 30 barrels a day, or at $30 per barrel, you can still continue to produce and get that revenue as if it were 60, because you had already promised that volume and they'd already promised you that dollar in return. The downside with that is that when prices go up above that hedged amount, let's see, that amount you are losing to the bank. You have to pay that amount to the bank or whoever you are hedged through. And I do apologize if I'm doing an absolutely terrible job explaining hedging. Let's see, I feel like graphics are easier for explaining hedging. Hedging oil and gas graphic. Surely there is a good That's funny. It says back to basics for hedging, but I want even more basic. Give me more basic. Well, hopefully I can talk my way through this. Yeah, I don't feel like any of these like just charts that I'm finding would help any. All of these charts are like, it just adds more terminology to the mix. If you have a good chart for hedging, I'll have to find one and keep it. Anyway, so for hedging, the reason that's important for the oil and gas mineral owner is it's independent. It's not passed down to the mineral owner. I mean, as far as I am aware, I've never seen a situation where it was passed down to the mineral owner. So let's say that you had the best decision of your life and you decided to hedge at $100 a barrel. I don't know, maybe someone was doing that in 2022 and you suddenly had this massive amount that you were able to hedge. Maybe you planned your drilling just right. I don't know. And you locked in all of your future production at a certain high price. We'll make our own chart. That one over here. Okay. Let's say you locked in at $100. It's only for the amount of volume that you can prove that you can produce, and you are running the risk of, if something happens and you're not able to produce that, it's not great. Like, there's financial consequences to not being able to deliver the amount that you're promising. So let's say that you were to hedge at 100. And because I now have two purple lines, we'll make this one, I can't even help myself. It doesn't matter what color it is, but am I going to still play with it? Yeah. How's your evening? What are y'all having for dinner? I don't know what's for dinner yet, and it's 7:05. I had lunch at 3:30. Okay, so let's say that you made a really good decision in January 2022. This was when the Ukraine Russian conflict kind of started. Like war pretty much universally always raises oil and gas prices. Let's say you hedged a certain amount and you were able to hedge all the way, volumes covered all the way until October of 2025. Every dollar that went under, if you got paid from your purchaser for that, $70 for that average pricing, you would get that money. I believe it's from the bank. Again, sorry for the explanation, but it's essentially functions like oil is still $100 for at least that volume. Now, every time you drill new wells, you're only going to be able to hedge a certain amount so you might hedge some volumes, and it's usually not a whole lot of time, just because there's a lot of risk involved in this, but you're going to have a whole bunch of stacked hedges of certain amounts of volumes that you can add and roll off and all those things. So you might have a bunch of different ones, but on average, you're going to, if you do have a hedging program, you're going to have an average. Crystal's going nuts about someone going on a walk, I think. You're going to have an average amount, average dollar price that it feels like oil and gas is still at, regardless of what's happening in the world. And so if we take this, because oil prices have been basically falling for the last 3 years, and there's been so much rhetoric around oil going down to 50, a lot of the most responsible oil companies out there were hedged above 50 and 60, 65. And the more of your portfolio, the more of your production that you could have hedged then the more that you were protected against this going down to 50. That was the U.S. rhetoric. And so, now, all right, great. So they were protected for the last, let's say that you were able to hedge at $65 here. And your average hedging portfolio, maybe half of your production that you're producing, you're getting paid $65. And then the rest of your production, you're getting whatever is the market price. It's going to feel like oil hasn't moved a lot from 60. And that's what's happening for at least a good number of producers out there right now. Is it kind of doesn't matter that oil has jumped up to 90. They're watching it for sure, but they've already had this message of it's not going to be 100. It's going to be 50. It's going to be 50. It's going to be 50. Prepare for 50. And there's a lot of time and energy and money put into preparing for 50. So they're like, no. We prepared for 50. We're doing really well at 60. We're going to maintain the plan and not change our plan. And we're going to eye it. We're going to strategize just in case. But we've been here before. However, the mineral owner doesn't have those swaps in place, and they don't have the hedging in place. And so when oil has an average price of $95 for that month, the mineral owner likely is receiving something close to 95, 90 for that month. It's much more closely tied to the moving market price, at least local to that oil. And oil has a much less diverse basis across the country. Like gas trades for different things. Like you can get different gas prices in West Texas versus in the Marcellus or East. I almost said East Texas. Marcellus is not East Texas. Marcellus is the East Coast. So you get massively different pricing because it's just massively different markets. But oil is much more, it moves around easier. So it stays within the U.S. easier. So if you're getting paid for oil and you don't know about a hedge that you have in place, you probably are getting something close to that price that you're seeing in the newspaper. Not for Brent. Don't look at Brent's pricing. That doesn't affect us here for the most part. Look for the West Texas Intermediate. Subtract, $5 to $10. Certain parts of the country, you might need to subtract more. The Utah oil, for example, that is quite a bit of a deduction. I don't know offhand the current. I don't know off the top of my head what the current deduction is, but just know that different parts of the country, if your oil has more stuff that's not oil, or has more, that's probably the easiest way to describe it. Stuff that's not oil in the oil, you're going to get less for the oil. Makes sense, right? When you put it that way. But otherwise, you're going to be really close to this $90, $100 oil. So if you're looking at minerals and you're used to looking at operated oil and gas assets, and I know that a lot of people have migrated either recently or over the last 5 to 10 years from operated assets to non-operated or mineral assets, be aware that there is going to be a disconnect whenever pricing goes up or down significantly and quickly, because that swing is going to affect the unhedged position much more than the hedged position. So conversely, when you ask me what the value of a mineral position is during one of those swings, it's going to swing slightly more than the exact same position if it was operated. There's a lot of assumptions and variables, but everything else isolated in that sentence. That is a real tangible thing, because these dollars that are happening and going to be paid out are real tangible money. So that you can't just ignore that just because Conoco says they're not going to deploy more rigs until, November. So yeah, I think that's a really interesting dynamic. It also is, it's just an interesting dynamic to think about, that if you have the viewpoint that these high oil prices are only benefiting the oil companies, that is not the case. It's really interesting to look at the average oil price that companies are receiving. Oh my gosh, Crystal, I am talking. I wonder if can y'all hear her going nuts? Every day she encourages the people in front of, who are walking down the road in front of us, to keep walking, and I guess it works because she does it the next day and the next day. Okay, yeah, I lost where I was, so that's probably enough rambling on that topic anyway. All right, so the poll, I said, do we have a topic preference for today? Oh my goodness, Crystal has such a rough life, guys. She's just beside herself. Okay. So our poll was royalty and minerals hot topics, U.S. oil and gas news, global oil and gas news, and it's pretty split. So because royalty and minerals hot topics won by a hair, we'll leave oil and gas more news for a later time, which is, I'm okay with that. Let's see. So okay. I did have a plan for what the next topic is. Let's see. How late do I want to go? Because, as mentioned, since it's a 6:30 live stream, I feel like I should have a game playing or something, or have this be just a little more laid back. Usually I try to make it we're during lunch, we're optimizing our lunch times, and we're learning and talking and bettering ourselves during lunch. But with it being 7:15, I'm like, well, maybe not. Okay, let's see. So there was one topic on I kind of want to talk about the explosion in, I keep wanting to say Port Aransas. It's the explosion in not Port Aransas, Port Arthur. And I think just the hot take, it's not a hot take. The short answer on that is it does not look like it should long-term impact things. But it is definitely a short-term impact for sure. Glad that no one was injured so far. So let's see. There's in case you missed it, I don't have a whole lot of viewers saying that they have California minerals. However, I mean, California likes to ignore the industry. However, there's quite a bit of California oil, and because of that, there's quite a bit of California mineral owners. And so if you are a California mineral owner and you're stumbling upon this video, or you know someone who owns California minerals, there is a setback that is being, I believe it's being, should I actually know the entire story before I start talking about it? Maybe. Okay, California setbacks. I will grab it right now I know what I'm looking for. It's like when you've been told the story. So it's basically the California setback is making it to where it's nearly impossible to drill any well the amount of setback. And a setback is saying that if there's a certain type of structure, you have to go a certain distance away before you do something else. So if you're in a subdivision and there's a setback against how far you can put your shed from the fence, that is the same idea. California setback requirements for oil and gas. So California NARO, so the National Association of Royalty Owners, they have been, I highly encourage you to get involved with the California chapter of NARO. They are being very vocal about this setback. And so it is the 3,200 foot health and protection zone setback between any oil and gas well, a new oil and gas well, and any home, school, hospital, or daycare. And if you think about how populated California is and how far, so 3,200 feet is about, was that 3/4 a mile? 5,200 in a foot. Let's see, equals 3,200 divided by, roughly 60% of a mile, about a half mile. So if you think about how, that's pretty far. I wouldn't want, even as an oil and gas person, I wouldn't want a oil well right next to my house. I think that'd just be weird. But I don't know, maybe it depends on the type. And if I didn't know anything about oil and gas wells, I definitely wouldn't want an oil and gas well right next to my house. But a half mile, that's pretty far. Like there's a wastewater treatment plant from my house, probably less than a mile from my house. And I don't really want that there, but I'm fine with it being there, and it stinks sometimes too. Like there's certain, it's part of, you can't be not in my backyard all the place, right? But California, the general, direction is that no more oil and gas should be used. And so that's not a problem. Not my backyard. It's not a problem for a lot of the voting population in California. And so, however, that setback and that law did make it to where people could not access their property. And that's where you start running into a problem. And so I don't want to improperly characterize all of it, but it is an active thing. They are looking for they're looking for people who are being directly impacted to be part of this class action and to try to overturn this setback. Now, Colorado also has a pretty decent setback. That one's even difficult to navigate, and it's maybe a third. Is it 1,200 feet or something? Colorado's setback, with how environmentally conscious Colorado is, even their setback is nowhere near California. So it's just the extreme measures that implies makes it to where people can't access their property. And minerals are property. This is sometimes millions of dollars of property that is underground that you're not being able to get to if those type of laws are enacted. And actually, most of the time, in most places, whatever's happening on the surface has to allow for the mineral owner, like the mineral estate, has to be able to get to those minerals as priority over what's happening on the surface. So usually it's flip-flopped from that. So it's kind of interesting. So I highly encourage you to reach out to the National Association of Royalty Owners, especially the California chapter, if you are interested in learning more about that, or if you're being directly impacted by that, or if you own minerals and you don't know that you're being directly impacted by that. You probably are somehow, because there's, I mean, you think about the population density in California, the likelihood of that impacting any oil and gas owner is pretty high. So let's see, other hot topics. Know that, let's see, we've covered in prior live streams how not filing the lease with the county can be a problem for mineral owners and other owners of interest. So that is something that's coming up in different states for making different rules around that. It's becoming more common to file a memorandum of oil and gas leases with the idea that it's easier, cheaper, more confidential to file those memorandums. But ultimately, you're really relying on your ability to keep records and your heirs' ability to keep records to be in line with any operator. So just think about your grandchildren and their ability to find where their passport is at any one given time. And maybe it's nice to have important documents that set who owns what under what terms to be filed legally somewhere. So, or at least to where someone has to give it to the other person if someone has it, because it's that important of a document. So that is check if your local state has activity around that topic. Obviously, I mean, maybe not obviously, lithium, still a hot topic. That is still a thing that is being established, like ownership of the water. We had a water episode a couple back. I still want to expand upon it more. The pros and cons of having a small business that is, we've been extremely busy, like, and blessed to be so busy. However, it's, we're trying to keep up with the busyness. And since, we're small businessing things, and anyone that's run a small business knows the fun that goes along with that. I never can quite get as much YouTubing as I want, which is what happened last week. I ran out of steam, flew too close to the sun and burnt out for a half second and had to take a half day off. This week, just had a meeting that got in the way. Okay. If you haven't, so actually, this is a great chance for me to advertise this. If you happen to be maybe a younger generation, maybe a cooler generation, that just enjoys a good old-fashioned video game, we have a Minecraft server here at Pecan Tree, and we have a very healthy oil field, multiple oil fields happening on this Minecraft server, thanks to our mods that we've installed. multiple oil companies established on this Minecraft server. We really welcome new people coming, exploring. There's a seismic, you can do seismic surveys, find the oil, find the big, find whether it's oil or water, actually. The first well we drilled was a water well, which seems appropriate, right? Like, start a new hypothetical company, and the first well you drill is going to be a water well. I think that's just the nature of this business, right? It's self-realistic. But yeah, you're welcome to join us. Let me know if you're interested in those details. I have some very probably extra cringeworthy videos and prior live streams kind of showing some of that off, but it's fun. I'm officially in the nerd community, and I've decided I can't help it. So, all right. Well, I think that's all I got for today. Let me know if y'all have more questions. I got several through email. That's why I try to aim the stuff that we're talking about in this live stream towards the questions that we get throughout the week. So the more questions that y'all drop, either in email, comments, even just next time you happen to get on the phone with me or Kelly or one of our employees, feel free to let them know what's on your mind, what you're thinking of, and we will cover that in the next live stream. So I love hearing from y'all. I guess I should do a little self-promo real quick. So here at Pecan Tree, we offer oil and gas appraisal services. We are a non-biased, independent valuation company. We do appraisals, point-in-time appraisals. So if you need like a date of death appraisal, we do everything oil and gas mineral estate related. So we don't do surface appraisals, but any type of interest, any type of date, time, location, all of the U.S., we do appraisals across everything. So if it has to do with value, we probably cover it. And along with that, we also have our online platform, Pecan Estimate. That was earlier in the stream what I referenced. And we have our Pecan Estimate here, where we have both mineral management, deal evaluation, and portfolio insights. We have all sorts of things, but we're trying to get more information out there to the world, to the market, to the industry, to the common person on what is happening in the oil and gas world, both from a reservoir, from a value, from an activity, from a what does this mean for me standpoint. So we'd love to see you on here. We'd love to give you a demo if you'd like to see this used with your own assets. If you have any use case and you think that this would be useful, give us a shout, and we'd love to hear from you. So with that, I think that's all I have. I will end by just having a nice little fun little zoom around the map, because that's always fun. Hope y'all have a wonderful evening, and I will talk to you all later. Next week, let's see. Do I have something happening next week where I can't? Let me see if I can not make empty promises this time. Let's see. Next week, Tuesday. Yeah. Tuesday, right now the plan is normal noon time frame on Tuesday. But let me know if you did like this time frame a little better, if this would work better for you to do an evening. I could do an evening. I think that would work with my schedule these days. Weekends get a little difficult, but yeah, evenings could work. So if this works better for y'all in general, let me know. And I'm happy to move stuff around. So, all right. Talk to y'all later, and thanks for joining, and we'll see y'all next week. Bye.